Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You are listening to the financialsurvivalnetwork.com. I'm Kerry Lutz on 1230 WBZT. Well, it appears there's a developing crisis in the developing world. What I'd like to know, what you'd like to know is this just happening? Is it by accident? Or is this all planned out? Is it by design? Here with us is John Rubino of DollarCollapse.com. Been a while. Welcome back.
Hey, Kerry. Good to talk to you.
Hey, so what the heck is going on here? The BRICS. You got India, man, their currency is collapsing faster than a fiat dollar. You got Brazil, they're collapsing. You got Turkey's currency, they're collapsing. I got to believe Russia's currency is going to collapse, and I got to believe China's currency is going to collapse right behind it.
Well, yeah, it was just a couple of years ago that all the new money that we were creating in the developed world was flowing into these emerging markets and spiking all their asset prices and generally causing trouble for them as it flowed in. Well, now it's flowing back out, and that's much, much worse for a small market, like a relatively small market like Brazil, for instance, because it sucks everything out of their currency exchange rate and their stock markets and their real estate markets, and basically collapses their economy. And there's nothing these guys can really do about it because they're relatively small compared to the U.S. and Japan and Europe. So when we decide to send a ton of hot money out into the world, they suffer for it. And when we decide we want that money back to support our stock and bond markets, then they suffer for it. And they scream about currency war, this, and we're collateral damage, that, and they're right, but there isn't anything they can do about it, and nobody really cares about their problems. So right now we're seeing the effects of it flowing back out on, like you said, India, their currency is collapsing. Brazil, their currency is falling even faster than India's, and it's not clear where this ends, but it definitely will involve some serious capital controls where these guys dramatically restrict what people can and can't do with money that once it's within the system. And that's bad for everybody, but it looks like it's their last resort now. It's their only way to stay afloat.
Hey, and they were lecturing the developed world a couple of years ago about how out of control we were, how smart they were, how their economies worked so much better than the developed world. Maybe they were right, but it sure doesn't look that way now, does it?
No, they were benefiting in some ways from all the hot money that was flowing in. So they had the hubris that comes from having their stock markets and their currency and their real estate all being in demand around the world. And so they weren't happy about some of the side effects, but it still made them feel like they were well-run countries and that they were doing a good job. And really what was happening was we were sending them huge amounts of money, which covered over a lot of the problems that they were allowing to fester. Now the money's flowing back out, and we're seeing that structurally they aren't as well run as we thought. And not that the developed world is in any way well run, but we're basically seeing that the whole global economy has these imbalances and these structural problems that can't be fixed by just creating a lot of new currency and throwing it at the problems. So at some point, the market is going to impose discipline on us all, and we're going to have to live within our means, and that level of spending is going to be dramatically less than today's level. So serious pain is out there in the future, and it's not clear how it manifests, which system collapses first and pulls the rest down with it, but clearly something big is about to happen. And Kerry, another thing we might want to talk about if we have time is that there's really a confluence of stuff happening right now. We've got, as we talked about, a crisis in the developing world, emerging markets tanking, and then we've got this thing with Syria, where the U.S. and Europe are getting ready to attack Syria, which could spike oil prices and cause all kinds of other troubles. And in the U.S., you've got the Fed wanting to taper, in other words, to stop buying bonds on the open market, and interest rates going up because of that, which affects the whole variable rate world out there, where everybody has bet on low interest rates and we've got to roll our debts over. But if we roll them over at higher rates, it causes this death spiral. And then you've got the debt ceiling debate going on in the U.S., where everybody is going to play chicken right up until the end because they think they can force the other side to blink. And that involves going to the deadline and beyond the deadline and seeing what happens. And that's the momentum that we have now. And it's all happening at once. So
amazing.
I think chaos is the only thing you can really predict with any certainty with all this stuff happening at once. So the September and October should be fascinating months.
Hey, well, one thing I want to say about these developing countries, any country where you can't turn on the faucet and put a glass under it and drink the water directly should not be lecturing any other country in the world about how to run stuff. Okay? Now, look, the water in the U.S. is spotty in places, but I challenge you to find me a city or a state that you can't go and put a glass under a faucet any place and drink it and not get sick, okay? You won't get sick any place in the U.S. doing that, okay? You go to any of those BRIC countries and you will be sick for months, any of them, okay? So they should shut up until they get water that's potable coming out of those faucets, okay? Yeah. That's my point. Till you can drink the water, they should shut up, okay? It's that simple.
Kerry, we do, you're right, have a functioning infrastructure in much of the U.S. But we have to keep in mind that a lot of that was bought with debt. We borrowed to build these systems, to build our roads out and to build our water treatment centers.
I won't argue with you, John. I'm just saying at least it went someplace. You know, they got empty cities in China and you still can't drink the water.
No. Yeah. Well, see the important thing to understand is that most of the world has been able to build this facade of success or progress in the case of emerging markets. But so much of that was built with other people's money that has to be paid back at some point in the future, which means that is taking development and maintenance in the future away. And we'll be less and less able to maintain these systems that we've built up over time, and they're going to deteriorate. We just don't have the money to maintain all the big systems that we build up. And so I've done a series of articles on dollarcollapse.com called Welcome to the Third World that chronicles how the U.S. is running out of money in various ways and letting various systems deteriorate. You know, you look at some of our big cities and the libraries are open 3 days a week and the schools are falling apart and the roads are falling apart and the cops take 20 minutes to get to your house when you call them. And these are all things that Americans associate with third world countries, but they're happening here.
Yeah.
And it's only going to get worse.
I totally agree with you. There's definitely problems, but you know, still compared to the rest of the world, for now, we've got a little bit of an advantage. Will we keep it? It certainly looks not, but you got a point. But this confluence, what's happening in Syria, we definitely are in for some chaotic times, and you know, never underestimate the ability of man to create chaos and to screw things up and to take a perfectly beautiful planet and mess things up beyond all belief, right?
Can you believe we're thinking about bombing somebody else in the Middle East? Of all the crazy stuff out there.
It's a target-rich environment, John. You got to appreciate that.
Yeah, but it's like, hey, our lives aren't complicated enough. Let's bomb somebody in the oil-producing part of the world and see what happens, you know?
Well, it's good if you're into oil futures, I guess.
Yeah, and bad if you're into anything else, except maybe gold and silver. I think precious metals would benefit from the kind of chaos that we're talking about. But, you know, you got to have mixed feelings about even that, because the kind of world where gold is $5,000 an ounce is not the kind of world where you and I want to live. You know, we were talking about the third worldization of the globe. And yes, okay, our gold is worth a lot, but we have to use it to live in a gated community and never venture out, in that kind of a scenario. So, I don't know.
Frightening, but hopefully, the only thing I could say is when you really get to the edge, somehow we find a way. The innovation, the ability of man to survive, you can't underestimate that, and hopefully, but it does get a bit frightening at times. And if we only knew what we were fighting for, we didn't know what we were fighting for in Vietnam. Fast forward to Kuwait and the first Gulf War, at least we had a clue. The guy overran Kuwait. Seems like a pretty harmless country with a lot of oil. We had a clue. Maybe in Afghanistan, we seem to have had a clue. Maybe they lied to us. Maybe they didn't. Iraq, certainly we didn't have a clue. And certainly now we don't have a clue. We didn't have a clue in Libya. I mean, what is it with these globalists here? Are they lying to us? Or are they just stupid? Or are they really brilliant? And is there really a 50-year plan here, John? I mean, you and I go back and forth on this kind of regularly.
Yeah, that really is the question. Are these guys completely incompetent? In which case, who knows what's going to happen next? Or are they smart, and are they putting in place a plan that in the next few years ends up with them completely taking over the world? And I don't know which of those is scarier. They're both pretty terrifying, and they both lead to chaos and various kinds of slavery for regular people down the road. But it's hard to say which it is that's playing out.
Hey, so up next, I want to talk about the rapidly vanishing housing bubble, because they spent trillions of dollars reflating that bubble. It seems to be gone now. And I want to talk about some of the projects that you're working on, ones that you can talk about, and what's going on with gold and silver. On the Financial Survival Network, I'm Kerry Lutz. We're talking with John Rubino of DollarCollapse.com on 1230 WBZT. I want to welcome our new sponsor, Audible. I've been listening to audiobooks from them for over 5 years now. I am a huge Audible fan. In fact, I've bought multiple Platinum memberships. Platinum membership, you buy 25 audiobooks at a time. I just got done listening to the first 3 or 4 books of the Jack Reacher series, the one you probably saw, or maybe you didn't, in the theater, Tom Cruise movie. I mean, just a wonderful book, wonderful series, expertly narrated, and so many times I'm in the car, I get sick of listening to music or news or the radio. I just put my iPod on, plays the book, and makes that trip go by so quickly. To me, this is one of the great things of the information revolution of the internet, is that you can get over 100,000 books on your iPad or iPod or iPhone instantly. Another thing that they have is courses on Audible, the Modern Scholar series. And I've listened to lectures about World War I, Shakespeare, nanotechnology, detective novels. It's so enlightening. To me, Audible is a must-have killer app for the iPhone, the iPad, for my computer, wherever I am. I'm always downloading these books. Like I say, they're a sponsor, so check them out. They've got a free audiobook and a 30-day free trial membership. Just sign up at audiblepodcast.com/Lutz, Lutz. Again, audiblepodcast.com/Lutz. Sign up today. Like I say, this to me is a dream sponsor. These are exactly the types of things that I like to pass on to you because I'm such a fanatical, over-the-top Audible user. 5-6 years I've been listening, hundreds of books. I used to think I was a well-read person, and it's a little strange when somebody asks you, did you read that book? And you have to say, well, somebody actually read it to me, but they actually did a better job than I could have, so I don't mind it. But my friend Sean Perger up in Vancouver, he listens to almost as many as I do, and he can't get enough. I know you're going to love this company, love their service. I do. So check them out. audiblepodcast.com/Lutz. We're back. FinancialSurvivalNetwork.com. Kerry Lutz. We're here with John Rubino of DollarCollapse.com on 1230 WBZT. So, John, what's your feeling about gold and silver, the price patterns you're seeing there? Looks like the bottom is well in place now, doesn't it?
Well, the last few weeks have been encouraging, but short-term movements in precious metals are completely unpredictable, I'm afraid, and in part because most markets are completely unpredictable, and in part because gold and silver are kind of manipulated. And
kind of, sort of, huh?
Yeah, you can argue about who's doing what, but you really can't argue about the fact that there's a lot of intervention going on, and it has a huge impact on these thin markets. You'll see gold and silver just get smashed at 4 o'clock in the morning when there might be 3 players out there with futures contracts to buy or sell. Somebody will come in with $20 billion worth of contracts to dump on the market, and so gold goes down by 8%. In 5 minutes. That's the kind of thing that would never happen in a market where people are actually trying to make money doing the trades, to position themselves.
Yeah, you think?
But only in a market where somebody wants to move the price for an ulterior motive. So you can't know when the next intervention is going to happen, and you can't know whether it's going to get smashed down or bid up or whatever. And what you can know about precious metals, though, is that the imbalance between the amount of paper that has been created in the last 30 years and the amount of precious metals that exists is immense. Therefore, over the long term, let's say 5 to 10 years, precious metals should go up dramatically. Now, what they do in the next 6 months is anybody's guess. But I'll go out on a limb right now and say 5 years from now, gold and the Dow Jones Industrial Average will be the same number, more or less, and it'll probably be something like 5,000. Mm-hmm. And how we get there from here, who knows? But that's the kind of imbalance that's being built up, and for it to be worked off and brought back into balance, you got to have gold go up like that.
Yeah, no doubt. Sinclair has been calling for a revaluation of gold and the balance sheets of all nations around the globe, and how realistic that is. Well, they're not going to do it. They're going to be brought to the mat kicking and screaming before they go upping the value of gold on their balance sheets to 5 or 10 or 15,000 an ounce. It's just not going to happen in the absence of an out-and-out crisis and disaster. Let's face it. They just won't do it.
No, but fundamentals always win out in the end. The people who are betting on an imbalance continuing, they win for a really long time until the market just smokes them. The imbalance gets redressed somehow. That happened in 2000 with tech stocks, and it happened in 2007 with the housing bubble, and it'll happen again with the sovereign debt bubble here pretty soon, where all this money that's been bet on the continuation of the bubble expanding will turn out to be on the wrong side of history and just get wiped out. And things like precious metals and short positions in the big banks will once again be great investments. But whether it happens this week or 2 years from now is anybody's guess. But I'll tell you what, though, right now it seems like there are an awful lot of things happening at the same time that have the potential together to cause the system to spin out of control. So it's not a bad speculation right now to bet on volatility. And some of that volatility will be interest rates spiking and precious metals maybe going up and stocks and bonds going down. So it could be one of those contra bets, betting against the system that periodically pays off in a really big way.
Yeah, well, speaking of that, so last time we talked, we were in awe that Bernanke had actually gotten the real estate bubble to reflate, and now it looks like the air is going out of that bubble, doesn't it?
Well, interest rates have gone up lately as there's been talk about the Fed scaling back its asset purchases, and that appears to have impacted the housing market. So the question becomes, what does the Fed do when it finds out that all the markets are reacting, preemptively to its hope that it can stop buying all these bonds? And I suspect that the Fed will have to take it back at some point in the not too distant future and say, "Oh, we were just kidding. We're going to keep on buying bonds at the old rate plus some more. We'll do $110 billion a month," and that might push interest rates back down temporarily and send a lot more money back into assets, and maybe real estate has another year to go. Who knows? Or it could lead the system down. At this point, it's just impossible to tell how everything spins out of control. Which piece of the puzzle is the first to go. But real estate does look like it's getting ready to roll over, at least temporarily, because right now the market has been pushed up by a couple of things. One is there was huge pent-up demand because housing sales were so low for so long, and interest rates were incredibly low, which made mortgages cheap, and there was a huge amount of cash flowing into the market from people who wanted to invest in real estate. Something like half the houses in the U.S. right now that are being sold are paid for with all cash, which means it's investors. It's people wanting to either flip them or rent them out for a few years. And that's the kind of imbalance that can't last for very long, because you build up too many rental properties in the market. And then those rental properties have to be sold because they're not profitable as rentals, and that forces prices back down. So we could see a spike in inventory for sale here pretty soon. That could be the thing that cracks the housing market.
Yeah, don't forget the shadow inventory, all these hedge funds buying up, Blackstone buying up thousands of units, and it's not efficient. Single-family houses as rental units for large-scale landlords, not an efficient investment. It just can't be.
That's a very new market. We haven't seen it happen on this scale before. And managing a system like this is incredibly complex, because each house is its own asset. It's got its own problems. The toilets break in one, and the roof leaks in another.
It needs a new oil. It needs a new water heater, and it needs a new furnace, like in the Northeast, and then, the grass in all these places needs to be cut. And the pools, the ones in Florida have pools, and they need new pumps. And, it's a maintenance nightmare, whereas multifamily housing has always been ideal for investors because, building holds 100 units. It only has one roof. It only has, one water heater. And it just makes total sense for investors to be running it. But for single family homes to be an investment vehicle, it makes sense for small businesses, for individuals to do it. Like we have a sponsor, Jason Hartman, and he shows investors how to make money off of this. It makes a lot of sense. But for multi-billion-dollar investment houses to be running this type of operation, you can't tell me it makes any sense, because they just need too big an operation to be running it. If they make a 3% cash on cash return, I'd be shocked. I mean, I just can't see them doing this. And if they have free money because they're borrowing at 25 basis points from the Fed, maybe it can make sense. But somebody's got to track all these things, and then wait till they start having to evict people en masse when the economy really turns south. This thing is just going to be a loser. I can see the handwriting on the wall, and we'll have an episode in another 18 months of life imitating FSN, because I will have called it. They'll be selling these things off. They will be getting out of this market so quickly and cursing the day. The CEO will be dumped from Blackstone, even though he probably owns a big chunk of it, and they'll be cursing the day they ever got into this market, John.
Well, they were placing a bet on asset appreciation when they did this. They assumed that cash flow might or might not be positive, but that houses, because they were so low, they were coming off a bottom, and interest rates were so low, and the government was so expansionary, that real estate prices would go up for the next decade, by and large. And this would make something where cash flow was maybe flat. It was break even. But if the house goes up by 20 or 30% over the course of a decade, you still make a profit. And that's what they were assuming would bail them out of any bad decisions or any stress regarding managing these assets. And if that doesn't happen, if home prices turn back around now because the investment side slows down, there's less cash buying houses, and mortgage rates are up, so fewer individuals can afford houses, you would see the market tank instead of just drift lower, because a lot of these thinly financed hedge fund bets would have to be reversed out. They'd have to sell their houses, and you'll see so much inventory come on the market that'll accelerate the process. Yeah, so, and this is something that 2 years ago, when you were looking at all the big risks that were out there, this wasn't on the radar screen. Nobody expected investors to buy this many single-family houses. And so we got one more big problem out there that might or might not blow up on us in the next couple of years. So the list of stuff that could go wrong just keeps getting bigger and bigger. And it's self-inflicted. You know, Syria, we didn't have to do Syria. And these hedge funds didn't have to place this kind of a gigantic bet on something as volatile and as hard to figure out and as non-fungible as single-family houses. They just did it. And that's really a lesson in the distortions that easy money create. Because when you just hand people financing at low rates on really favorable terms, they feel compelled to do something with it. So after they've done all the reasonable things and there's still a ton of money available, they start doing unreasonable things, because they make fees in the short run. They get big bonuses. And even if they're wrong, it's not going to blow up for a few years. So make a $12 million bonus this year and retire. That's fine. And so that's the incentive that easy money imposes on the financial system. And we see dozens of examples of this, and the housing thing is just one more.
Yep, that's the core of malinvestment. This is exactly what Mises discussed, and Hayek, and Rothbard, the whole lot of them. When you don't allow interest rates to function as an allocative mechanism where investments get made based on the natural interest rate rather than an interest rate that's arbitrarily set by some guy with a beard, behind a big desk with a fancy title and a bunch of degrees after his name. This is what you wind up with. And this is what we've been dealing with since 1913, John.
Yeah. Yeah, and the amplitude is getting bigger and bigger. Each new bubble is bigger than the last, which means each bursting of the bubble is more traumatic and requires a bigger policy response. And so you've got to think we're pretty close to the end of this, because the bubble that we're blowing up now, we could call it the sovereign government bonds around the world are grossly overvalued, or the fiat currency bubble, which means fiat currencies are grossly overvalued based on supply and demand. And when that bubble bursts, what's left? There's nothing left to inflate. And the bursting of it will be so catastrophic that it'll make 2008 seem like a little blip, a minor recession. And
nothing will be left in its path except gold and silver.
Yeah. And so the question then becomes, what's the process of going from that mess to a system that has sound money again? And there could be a chaotic process, or there could be something where the governments of the world finally wake up and just link their currencies to $3,000 or $4,000 or $5,000 gold, which is a massive devaluation across the board of all the major currencies in the world, and a resulting big burst in inflation, and then stability after that. That's what happened with Weimar Germany. They had this incredible hyperinflation that we still talk about today, but it was just 2 or 3 years, and then they adopted a sound currency, and everything stopped. So we could do that, or we could have a decade of absolute chaos where one thing gets tried and it doesn't work, and we fight a big war to distract our population, and then something else gets tried, and it just goes on and on. And I don't know. I think how that goes depends on the decisions of people under extreme pressure, made in the moment with incomplete information. So. Again, chaos. That's my only prediction.
Yeah, that's the theme. That's the theme for the years ahead, chaos.
Yeah,
On that note, we find you at dollarcollapse.com And we've always got links to John constantly on financialsurvivalnetwork.com. Make sure you subscribe. Got a really good report coming up shortly, combining financial survival with physical survival, getting healthy, because one of the best ways of conserving your financial resources is by getting physically fit and healthy. There is no better way. Personal experience can tell you that's the truth. So financialsurvivalnetwork.com, upper right-hand corner, click the box, sign up. Newsletter will resume shortly as soon as I get around to it, I promise. And John, as always, a pleasure. We'll see you soon, hopefully at the Silver Summit, and you be well.
Great, Kerry. Good talking to you.
Take care.
See ya.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.